All right, so the S&P 500 is up better than 16% in the second half of this year, but individual investors may have missed out on that run. Jeff Kleintop is the chief market strategist for LPL Financial. He joins us now. Thanks for coming in. Appreciate it.
Thanks for having me. Great to be here.
Of course, and it's interesting. I was reading some of your latest notes, and you point out the fact that even though we see more funds going into the market, individual investors have pulled out. They're investing in foreign stocks, U.S. Treasuries. They don't want to be a part of the equity market right now.
Right. It's just foreign investors and institutions that are really putting their money into the U.S. stock market. Individuals are pulling them out. The interesting thing is they're not putting it in cash. Mm-hmm. They're not fearing risk. They're buying emerging market stocks and commodities and high-yield bonds. They're just avoiding that one asset class that's burned them now twice in the last 10 years with 50% back-to-back declines in the S&P 500.
Well, speak to why you think that is, and also the fact that you pointed out in another one of your notes that you think that gold, which has seen a little bit of a price dip in the past few weeks, and also emerging markets are resembling bubbles, in your opinion.
Or they're getting close to being
getting
bubbles
close.
Anyway. It's interesting. Individuals have sold U.S. stocks, represented by mutual funds, retail mutual funds investing in large cap stocks, every single week since the flash crash back in April. Right, that was that day where we had that 900,000 point one-day decline and then rebound.
That was a long time ago.
Yeah, but every single week since then they've been net sellers, even though we've seen strong rallies in the market. In fact, we've never seen a 3-month move greater than 10% to the upside in the market without seeing individuals come back.
Do you see, Jeff, any risk of further sell-off or a major sell-off in the last month, last 5 weeks or so that we have left in this trading year?
I'm worried about the next few weeks. Between now and mid-December, when we're probably not going to get much action on the passing of the tax extensions, a lot of questions about what the next round of announcements from the Fed might be on December 16th. Quite a bit of uncertainty over the next several weeks. I saw this morning that the Republicans shot down an extension of unemployment benefits due to expire November 30th. So we could see all these unemployment benefits expired just ahead of Christmas time. That can certainly raise some questions around the retailers. So
sure.
A lot of volatility there, but we think we'll get that Santa Claus rally. Stocks bounce back as we get some progress on the tax front and from the Fed before year end.
If we do not see an extension of the Bush tax cuts for the top bracket, the top earners in this country, what's your take on what that does to the market? Because those are the people that spend the most. GDP, 2/3 of that is consumer spending. So what kind of impact would that have?
Yeah, well, that high-end consumer segment does make up 40 or 50% of consumer spending, so it's a big chunk. So as we look to the first quarter of next year, we might expect to see a slower pace of economic growth, already anticipating something below average, though still positive. It would certainly put a negative bias to our forecast. I'd say something like that probably shaves maybe 0.5% to 1% off of 2011 GDP.
Can't afford right now whatsoever. What about sectors that you expect to be strong in the next few weeks heading up to the end of the year?
Through the end of the year, I think the material sector, energy sector, industrials, anything tied to that commodity theme, as the dollar is likely to continue its downward slide, those companies that produce and export commodities, I think, are going to be positioned the best.
Any commodity you like in particular?
Well, precious metals, base metals, really they all look pretty good. Part of it is not so much about the supply and demand fundamentals for those unique commodities. It's that the dollar's merely going lower. So everything priced in dollars seems to go up. So you almost can't miss in the commodity
And
universe.
when do you think we see that turnaround in the dollar, see some dollar strength come back? Bernanke, speaking in Germany just this week, confirmed we will see that. We will see a strength in our currency. When are you preparing for that to happen?
Might not be till the middle of next year at the earliest. That's when the Fed might begin to pull back from some of its extraordinary efforts to add additional stimulus, print more money, which has been pushing down the value of the dollar. Only at that point, when they perhaps begin to turn the tide on stimulus, will we actually see the dollar begin to find some support.
We're a ways out.
Yeah, I think so.